Most people think bad credit happens slowly. It doesn't. Some mistakes can destroy your credit score in days, not months. And the scary part? Millions of Americans are making these mistakes right now, without realizing it. Stay till the end, because the last mistake is the fastest credit score killer of them all. Your credit score is one of the most powerful numbers in your financial life. It affects loan approvals, interest rates, housing applications, insurance costs. But here's what most people don't know. Credit scores don't drop randomly. They drop for specific reasons. Once you understand what damages your score the fastest, you can avoid it completely. Let's break down the biggest credit score killers. Mistake 1: missing payments. This is the one fastest way to destroy your score. Payment history makes up 35% of your credit score. One late payment can drop your score by 50 to 100 points. And if it goes 30, 60, or 90 days late, it gets worse each time. Lenders see late payments as a warning sign. This person might not repay debt, even if everything else is perfect. Missed payments can outweigh it all. That's why people with high incomes can still have bad credit. Consistency matters more than income. Mistake 2: maxing out your credit cards. Your credit utilization ratio makes up about 30% of your score. This is how much credit you're using compared to your limit. Example: if your limit equals $1,000 and your balance equals $900, that's 90% utilization, very bad. Credit experts recommend under 30% equals good. Under 10% equals excellent. Maxed out cards signal financial stress. Even if you pay on time, high balances can drop your score quickly. Many people don't realize this, because they think payment history is the only thing that matters. It's not. Mistake 3: applying for too many cards. Every time you apply for credit, a hard inquiry is recorded. Too many inquiries in a short time tells lenders this person is desperate for credit. Each inquiry can lower your score slightly. But multiple applications at once? That can cause a noticeable drop, especially if your credit history is short. Smart borrowers space applications out, not because they can't apply, but because timing protects their score. Mistake 4: closing old credit cards. This surprises most people. Closing a credit card can hurt your score. Why? Because it affects two important factors: credit history length, utilization ratio. Older accounts increase your average credit age. And when you close a card, your total available credit decreases. That can instantly raise your utilization percentage, even if you didn't spend more money. In many cases, keeping an old card open with zero balance is better than closing it. Mistake 5: collection accounts. If a bill goes unpaid long enough, it may be sent to collections. This is one of the most damaging things for your credit. Collections can stay on your report for up to 7 years. Even small unpaid bills, like medical or utility balances, can trigger major score drops. Many people don't check their credit reports regularly, so they don't notice collections until they apply for a loan. By then, the damage is already done. Mistake 6: high balances reported at statement time. Here's something most people don't know. Your score is based on what gets reported, not what you pay later. If your statement closes with a high balance, that's what gets reported to credit bureaus, even if you pay it off the next day. That means timing matters. Paying your balance before the statement date can improve your score faster than paying on the due date. Same payment, different timing, different score impact. Fastest credit score killer: defaulting on a loan. This is the most damaging mistake of all. Defaulting means you stop paying entirely. This can lead to collections, legal action, charge-offs, severe score drops. Defaults stay on your report for years and signal extreme risk to lenders. This single mistake can drop a good score into poor range very quickly. It's not just a setback. It's a major financial red flag. The real reason scores drop fast. Most people think credit damage happens because they're irresponsible. That's not true. Credit scores drop fast because people don't understand the system. When you don't know the rules, you accidentally break them. But once you know the rules, protecting your score becomes simple. How smart people protect their credit. People with strong credit usually follow a few simple habits. They never miss payments. They keep balances low. They apply for credit rarely. They monitor their reports. Not complicated. Just consistent. Good credit isn't luck. It's predictable behavior. Final message. Your credit score isn't permanent. It changes based on what you do today. Avoid the fastest mistakes, and your score improves naturally. Damage it, and it drops faster than you expect. Credit isn't about perfection. It's about awareness. If you want more simple money systems, AI financial tools, and strategies Americans use to win financially, subscribe to The Money System. Because smart money decisions today create freedom tomorrow.